Tonight, we begin with a story that sits at the very center of the global technological revolution, one that raises both excitement and anxiety. Nvidia has once again delivered a powerful signal about the explosive demand for AI infrastructure. The company's latest results show that the world's hunger for AI capability remains insatiable, from hyperscale data centers to corporations racing to modernize their digital foundations. But behind the celebration lies a persistent question that refuses to go away. Is this remarkable acceleration a sign of long-term transformation, or are we watching the early tremors of an AI bubble? Nvidia's performance paints a picture of extraordinary momentum, yet analysts warn that the broader ecosystem, particularly the surge in debt-financed data center expansion, may be stretching itself thin. As markets cheer and investors surge back with renewed confidence, experts caution that not all growth is created equal. While Nvidia's chip sales continue dominating headlines, the story beneath the surface is more complex. Yes, demand for high-performance GPUs remains overwhelming, with waiting lists that extend months and clients ranging from tech giants to government institutions. But even as orders soar, the infrastructure required to support such computing power is becoming increasingly expensive. Data center developers are taking on record levels of debt to keep pace with global AI ambitions, driving an arms race that some analysts believe may be moving faster than financial fundamentals justify. The pressure to expand quickly has created a situation where companies feel compelled to build now and worry about profitability later. This imbalance between surging hardware demand and the cost of building environments capable of housing that hardware is emerging as the central tension in the AI economy. For Nvidia, the narrative remains overwhelmingly positive. The company's architecture continues to set industry standards, and its role as the backbone of AI model training is undisputed. But market observers insist that Nvidia's strength doesn't automatically shield the broader tech landscape from risk. The fear is not that Nvidia will falter, but that the surrounding ecosystem may overextend itself in an attempt to keep up. Data center operators, cloud providers, and hosting companies are pouring billions into new facilities, driven by the belief that AI workloads will only multiply. Yet many of these investments are financed through short-term borrowing, creating exposure if growth slows or if competition intensifies. The disconnect between Nvidia's extraordinary success and the financial strain felt by infrastructure builders has become a key indicator analysts now track closely, a barometer for whether the AI boom is sustainable or overinflated. Still, Nvidia's latest report provides valuable clarity. AI demand is not theoretical, and it is not fading. Companies across every major sector, healthcare, finance, retail, manufacturing, are shifting aggressively toward automation and generative AI systems. This isn't a temporary trend. It reflects a structural transformation in how industries operate. However, the question remains whether investment levels match realistic long-term adoption rates. Some experts argue that companies are investing in AI infrastructure faster than they can actually integrate it, creating a mismatch between capacity and application. Others claim this rapid build-out is not only justified, but necessary, as future AI models will require exponentially larger computing environments. What becomes clear is that Nvidia's results confirm strong demand, but they do not resolve the lingering uncertainty that clouds the AI market's future trajectory. As investors react to Nvidia's report, the conversation is shifting toward what this means for the global economy. On one hand, Nvidia's momentum suggests a powerful technological wave that could redefine productivity for decades. On the other, the scale of capital pouring into AI infrastructure is unprecedented and potentially unstable. Several major data center operators are now committing to multi-billion-dollar expansion plans, betting that demand for AI processing will remain permanently elevated. Yet economists warn that such aggressive investment patterns often precede periods of correction. If AI adoption slows even slightly, companies with heavy debt loads could find themselves exposed. The question is no longer whether AI is transformative, but whether the pace of spending is rational. With Nvidia signaling strength and conviction, the broader market must now decide whether to follow that signal confidently or question whether the enthusiasm is eclipsing financial prudence. Another area of concern is the growing disparity between technology leaders and businesses still in the early stages of AI integration. Many firms are purchasing expensive AI capabilities long before they have defined strategies for using them effectively. This gap creates a situation where infrastructure growth outpaces organizational readiness, leading to underutilized systems despite massive investment. Nvidia's continued dominance encourages companies to expand their AI budgets, but analysts argue that sustainable growth requires more than GPU purchases. It requires training, talent development, and long-term operational planning. Without these components, a portion of current AI spending may fail to generate meaningful returns. This mismatch contributes to bubble-like behavior, where enthusiasm drives spending faster than value can be extracted. Nvidia's success is genuine, but it may also be inadvertently amplifying pressures that smaller companies are unequipped to handle. Still, it would be inaccurate to characterize the entire AI market as speculative. Many sectors are already reporting substantial gains from AI deployment. Financial institutions are reducing operational costs through automation. Hospitals are improving diagnostic accuracy with machine learning tools. Manufacturers are optimizing logistics and minimizing downtime using predictive AI systems. These real-world applications indicate that AI has established a foothold that extends far beyond hype. Nvidia's results underscore this fundamental shift, demonstrating that demand is not limited to tech giants, but is spreading across industries. The challenge is determining whether this growth is stable enough to support the massive financial commitments currently being made. If AI adoption continues on its current trajectory, infrastructure spending may well be justified, but if adoption plateaus, many organizations could find themselves with costly systems that deliver limited returns. Financial analysts are now paying close attention to the behavior of capital markets around AI. Venture funds are flooding startups with resources, often valuing companies on projected AI capability rather than proven profitability. Meanwhile, large corporations feel pressure to announce AI-driven initiatives simply to maintain investor confidence. In this environment, Nvidia's success becomes both a beacon and a warning. It showcases the power of AI investment done right, but also reveals how dependent the market has become on a single segment of the tech ecosystem. If GPU supply tightens, or competition intensifies, or AI performance improvements slow, the ripple effects could be substantial. For now, Nvidia remains firmly in control, yet the concentration of market influence around one company is raising questions about systemic risk, particularly for firms taking on heavy debt to expand AI infrastructure without a clear revenue pathway. As the dust settles on Nvidia's latest earnings, the industry is left with a complex picture. Extraordinary growth, grounded in real technological progress, shadowed by the financial risks of rapid expansion. Nvidia has proven that AI demand is not a fad. It is a structural shift that will shape the next phase of digital innovation. But its success also exposes a fragile ecosystem built on aggressive spending, tight timelines, and debt-heavy infrastructure strategies that may not withstand market volatility. Whether this moment represents the early stages of a durable transformation or the inflation of a broader AI investment bubble remains uncertain. What is clear is that Nvidia's performance will continue to serve as a global barometer for AI sentiment. And as companies push forward into an AI-powered future, the world will be watching closely to see whether this momentum builds a lasting foundation or stretches the limits of growth too far, too fast.